before we get into your 10 stocks, if you didn't already know, for the next 2 weeks, I'm asking our guests to come up with their top stock for a share market crash. Now, as you all know, I get a bit nervous at September, October, because it seems to be the time of massive volatility in share markets, and all of the big historic crashes seem to happen in October. So I approach this with a bit of fear. But you talk to experts, the gurus like Scott and Mark, and their view is, why would you fear it? It's a time to get stuck into your watch list. All of those stocks that you think are too expensive but are great quality shares to invest in, a crash gives you a chance to invest in a pullback. And that's the way we should all be approaching it. So I've asked them to come up with their stock that they load up on in a crash. Scott, what have you come up with?
All right, Koshy. So I'm going to assume I've got two for you, mate. I've been told by your producer, Claudia, I can only have one. So I'm going to give you one and a bonus stock.
Okay.
The stock I'm going to choose is Washington H. Soul Pattinson, mate. I own the shares for full disclosure. SOL is the code. And this is a business that is just one of... And that's the beauty of it, right? If you get... See, here's the thing. We recommended this, I want to say, 5 or 6 years ago to our members. And at the time, people said, no, I'm not going to buy Soul Pats. I'll buy shares in TPG, which is part of it, which is more exciting, or API, which is part of Soul Patch, which is more exciting. Yep. Turns out in the duration, you would have been better with Soul Pats itself. That's kind of the point, right? These guys are just market beaters over 1, 3, 5, 10, 15 years, despite that boredom. So if you get a chance to buy them on the cheap, if you get a chance to buy them at 15, 20, 25, 30% lower than the current share price because the market freaks out, they are literally handing out free money. So Soul Pats for mine is just too good to ignore. If you want to find a great, really genuinely great business, a super long-term hold, run by super long-term focused management, they don't come any better than Soul Pats on the ASX. And if you get a chance to buy it, when the market's throwing them out with the bathwater, then that's an even better way to do it. Really quick additional one, Koshy, is AP Eagers, or Eagers Automotive, it's called these days. This is the other end of the spectrum. So if you want a safe stock in a downturn, fill your boots with Soul Pats. Right. The thing is, when you get a downturn, the ones you should actually want to buy are the ones that have fallen most. And pounds to peanuts, next time we have a pullback, next time we have a market crash, if people are worried about the economy, and that's why there's a crash, those that are most exposed, like new car sellers, are going to fall through the absolute floor while people freak out, absolutely freak out. If you look at the AP Eagers share price, it's done exactly that a couple of times over the last decade or two. And so this is one that's likely to fall 50, 60, 70, even 80% from top to bottom if the market freaks out about the economy itself, as long as it hasn't got too much debt, as long as its solvency isn't at risk, and we can't know what will happen by that point. But this is one, if it's still a solid business with a good balance sheet, this is one that's going to fall further and therefore almost by definition have more upside. So I go with Soul Pats, but if you've got the stomach for it and you can afford to wait and maybe see it fall even further after you buy, AP Eagers, or Eagers Automotive as it's called these days, APE is the code, is one I'd also add to my watch list. So there's two for the price of one.
All right, excellent. All right, Mark?
Sure. I actually took the question a little bit differently. I thought you meant which would you want to be in a crash? So that as in what you have rather than what you play when there's a crash. Because, of course, whenever there's a crash and you never know when it's going to be, you then spoil for choice. And the challenge is twofold. Firstly, you've got to have some capital. Otherwise, you can't buy anything. And two, then you've got to have the intestinal fortitude to buy when the market's right down, and that's easier said than done. And we always say, the best bargains are when there's blood in the street, or when the market crashes, that's when the biggest money's made. But it is actually very difficult to do it. And even when we had the Corona drop in March last year, a hell of a lot of people had money and didn't pull the trigger and buy the bargains, and then very quickly they bounced back higher than where they were before. Anyway, the company I chose for a safe company to be in a crash was Fisher Paykel Healthcare, FPH. It's actually quite very good value at the moment. This is a non-cyclical business, because remember, what you want is, if there's a major drop in the market, if you don't want to lose your money, you don't want companies that are highly indebted, that's for sure. Fisher Paykel's got virtually no debt. It's a global market leader in the healthcare area, a bit like CSL Cochlear. It's in the same category as those guys, except it's a lot cheaper. And at the moment, it's a triple green for Teaminvest, which means it's got the highest earnings ever. Its target price is well below our required rate of return, and the PE is in the bottom quartile of its range. So we're showing Fisher Paykel returning 10% on a margin of safety and 28% per year on default. Now, if you have a crash, there's no way Fisher Paykel was going broke. They'll still be there and they'll come out of it just fine. So I looked at it from the point of view of, what sort of business do you want to be in? And you want to be in a business that isn't going to be damaged, because people will still need ventilators and hospitals will still buy all the consumables from Fisher Paykel. And a very similar situation with CSL, which is also pretty good value, and Cochlear, which isn't good value. It's very expensive at the moment.
Right, yeah. In fact, yesterday, Nathan Somasundaram was saying, look, Australia has world-class healthcare stocks. His pick was CSL, but he said, you could easily do the same for Fisher Paykel. They're just world-class and well valued on a global market as well.
That's right, and they're not going anywhere. That's the point.
No.
So if there's a crash, they'll still be there. The share price will come down a bit, and then as we come out of it, it'll very quickly come back.
Yeah, exactly.